Hey folks, Dan Frio here with your market update for July 18th, 2024. So we had kind of a pivot today. So what are we looking for? Well, we're trying to figure out is and when the Federal Reserve is going to cut rates. So basically everybody's saying they're going to cut rates in September, but are they going to cut at the next meeting coming up in just 13 days? We had some interesting numbers come in today. So let's take a deep dive into that and then we'll talk about interest rates here in a minute. So the economic news for today came in and it's this. Now what you have to understand is here's what the Federal Reserve wants. They want more people not working. Okay, they want the manufacturing, everything's starting to really retract, so it'll pull money out of the system. So if people aren't working, they're not making any money. Okay, so that's what their hopes are, and it's been kind of working up until now. But here's a number that just took us for a loop today. So first thing that came in was initial jobless claims. So the number previously was 223. They expected it to basically be steady right there, and it came in at 243. So that's telling us more and more people got let go. Okay, so that's basically good news for the Fed. Okay, so now here's the curveball that we were just throwing. Look at this number. This is the manufacturing index. What exactly is this? So I went to ChatGTP and I put this in here. What is the Philly Fed index? And right through here, it measures the health of the manufacturing sector in the third district, which is Pennsylvania, Delaware, and New Jersey. So when you go back to these numbers, look at the numbers. Man, it is way out there. So now there's a conundrum. What's the Federal Reserve going to do? So let's take a little bit of a dive into these numbers. The first thing we want to go to is the Federal Reserve's meeting in 13 days. What are they going to do? Well, let's go down through here and see what the probabilities are. You guys know what this channel is by now, or what this website is by now. So look up through here, right above my head at the July meeting, there's still a 95% chance they're going to do nothing. Okay, so now here's this number's been teetering around between like 90 and 100%, saying it's a September meeting. Basically, if the Fed doesn't pivot at that time, the markets are going to crash. I'll just put it that way. Okay, so that's what we're seeing so far. When you go over to this, here's basically what the headline news are. This is what I get on my alerts. It says jobless claims went from 223 to 243, a huge move there. Continued claims. Now the 1.8 million figure, this has been holding steady, and that's bad news. But again, good news when it comes to the Fed. So we went from 1.847 to 1.867. So we're staying over the 1.8 million mark. So that's bad news, but good news. And then here's where everything came off the rails. Manufacturing went from 1.3 to 13. So that's a huge move there. Let's see how that's affecting the markets right now. Right now, we got the MBSs up 4 ticks. What does that mean? So how I follow rates and how you should follow rates, and your mortgage advisor should be following rates, is through here. You don't watch the 10-year Treasury. You don't just watch the news to see what's going on. You follow the bond market. And what we follow here is the mortgage bonds. Okay, it's right through here. It's called the MBS. All you need to understand is this. If this price is going up, if the price of a bond's going up, that means its yields are coming down. The interest rates are coming down. So if this is a mortgage bond, that means mortgage rates are going to come down. So up 3 or 4 ticks isn't going to do anything to the markets. So let's see how the overall markets are reacting to this. Oh, we got the Dow Jones up again over 100 points. The S&P up 20 points. We got NASDAQ coming back a little bit from a brutal day yesterday. It's now up 53. Let's go to cryptocurrencies. I think they're basically flat. Yeah, when you're talking $300, it's flat. And then I look at oil to see I focus in on oil because it gives me a good read on inflation. So oil right now is down as well, holding steady at the gains 3 weeks. Crude oil inventory decline. So all that is good news, except now here we go again. President Biden is trying to forgive $1.2 billion. 1.2 billion. So let me explain why this is my pet peeve. Okay, so here's how interest rates work. Okay, well, like I was saying before, how mortgage rates work is through a mortgage bond. All right, right through here. So what happens is companies issue mortgage bonds to raise capital to pay debt. The government issues bonds because they're insolvent, basically. They don't have enough money, so they're issuing bonds at unprecedented levels right now. And then you have mortgage bonds. So you have all these bonds hitting the market, and what's happening is investors are saying, you know, we're going to keep driving down the prices of this because there's too much out there. When the prices go down, what did I tell you? Interest rates or yields go up. Okay, so then when you start throwing, again, we already have almost $35 trillion deficit, okay? So now to add fuel to the fire, they're going to add another $1.2 billion for relief for 35,000 students. Okay, so That's all my take there. So you're just going to add another 1.2 billion in bonds because the government doesn't have this money to basically pay off this debt. So they're going to have to issue more and more bonds. The more bonds being issued, the more the prices are going to be driven down because of the quantity of bonds out there. Thus, the yields are going to stay higher. Now, why other rates like car loans, credit card rates, and things like that, they're going to start coming down a little bit because when the Federal Reserve does pivot, they control short-term rates, things like credit cards, car loans, personal loans. It also affects your savings accounts, your money markets, your CDs, and things like that. So you're going to start seeing those yields start to come back as well. But I don't think we're going to be back down to the 0 to 0.25 in your savings account anytime soon. So don't worry about that. But try to lock in some of these higher yields if you're sitting on cash. So that's my report for today. So mortgage rates aren't really going to move because we had conflicting data. One, more people got let go, but two, the manufacturing sector is kicking on all cylinders right now, and I don't get that part of it. So if you're wondering who the heck I am, well, my name is Dan Frio. I'm a mortgage advisor. I'm basically a loan officer licensed in all 50 states. Yes, all 50 states as well as Puerto Rico. If you're out there trying to buy your first house, maybe buy a rental property, figure out how you can use the equity in your home to buy a rental property, looking to maybe refinance. You closed 6 months or so ago and the rate was 8% or higher, reach out to us. We'd love to help you. Okay, our website is therateupdate.com. If you have a quote right now from another lender and you want to see from us, can we get you any better? Because we're one of the country's largest mortgage brokers as well. We're ServBank, which is a federal bank, but we're also one of the country's largest brokers. Send us your loan estimate. You can click right there, upload your loan estimate. I'll take a review of it, get right back to you. If you're looking to buy your first house or a house, check and see if you're available for any grants. Check that out. But if you just want to get the ball rolling, because I always say, don't disqualify yourself. Click the Apply Now button. You're on your way. You'll set up a consultation with us, talk through all the questions that you have. But if you want to just call us in right now and get the ball rolling immediately, well, do that too. You can go to the bottom of our website right through there, and you can find our 800 number, which is 844-775-5626. Or you can reach me by email, which is right here, Dan@therateupdate.com. So thanks so much for watching, guys. Please, if you haven't yet subscribed, please do so that right over there. And I won't be posting a closing bell report because I have a bunch of family members in, and I'm taking my great nephew golfing later this afternoon. So I'll be out on the golf course. Hopefully you guys can enjoy your evening as well, and I'll be back here first thing tomorrow morning to give you the report of what the heck's going on in real estate. Take care, folks. See you tomorrow. Bye-bye.